Saturday, June 24th, 2023, Monaco 64, home of alternative economics and contrarian views. We're going to look at whether Rishi Sunak and his chancellor, Jeremy Hunt, will be able to stop the tide or the flood of foreclosures from the real estate market and higher mortgage rates. Before we look into it, though, I like to look at the concept of the King Canute and the tide. Some people say it's a myth, that it never happened, but I think it's useful to look into it. And it says here, in the story, Canute demonstrates to his flattering courtiers that he has no control over the elements, the incoming tide, explaining that secular power is vain compared to the supreme power of God. And you could replace God also for nature, I would say. And everything that happens, in my opinion, in markets, throughout nations and society, is to do with nature and God. You might not agree with me, but that's the way I look at it. The other principle or law, actually, that I want to look at before we look into what's going on in the UK mortgage or real estate market is Newton's third law, which I touched upon a few weeks ago, I think, in one of my videos. And this third law states, for every action or force in nature, there's an equal and opposite reaction. So I think this will help you maybe understand the enormity of the crisis that we're in. And I'll tell you right away that I don't think they're going to succeed in resolving this just by making it so, by telling people that don't worry, or credit rating won't be affected, you can do this and that. And we're going to come to that in a minute. Before I do, though, I like to say that the Mike and Mario show now is live every Friday. So Mike and I do it simultaneously on his channel and my channel. So that's why I don't publish it as a recording on the Saturdays anymore. So if you want to watch the Mike and Mario show, if you didn't get the chance to watch it live, and it's at 5 p.m. London on Fridays, you can go onto my YouTube channel and search for it, because it's there. And I'll put it up in the cards here too. And before we go into what's going on here in the UK, just wanted to say that I spoke to Oliver Temple yesterday, and they said that they have the 1 ounce gold Krugerrand deal back on. So you can get it for 0.5% over spot if you use my promo code Monaco64. All the details are going to be below in the description of this video. So what's going on here in the UK? We're going to look at the 2-year yield again. But as you can see here, this is fresh news. UK banks agree to a 12-month delay on home repossessions. Deal with Treasury comes as interest rates forecast to peak at 6.25% and house prices to fall 10%. Again, that's wishful thinking, in my opinion. I think maybe 6 months ago, interest rates were forecast to peak at 4.5%, maybe 5%. Now they keep lifting it. The market is behind the curve. And I think they're still wrong. They're still underestimating where interest rates are going to go. And we're going to look into that again, of course, why I think that is so. The Telegraph is reporting it as well. It says Hunt offers mortgage flexibility to ease pain from surging interest rates. And there's an interesting part on this in this article here. It says the average mortgage borrower will suffer a jump in payments of £280 per month, according to the Institute for Fiscal Studies, after typical 2-year rates soared from 2.5% 2 years ago and 3.25% last year to more than 6% this week. The Bank of England this week increased the base rate from 4.5% to 5%. So keep that 2-year time frame in mind, because we're going to look now at the 2-year gilt yield, because that's really important. It's the reference rate for 2-year swap yields, which are used to set mortgages. And yes, so do I think this is going to help? It might help temporarily. And I think Jeremy Hunt and Rishi Sunak and the bankers and the economists, they assume that they will be able to tame inflation very soon, and that everything will go back to normal next year. Rates will come back down and everything will be all right. But I'm afraid to say they've been wrong about everything concerning rising prices or inflation. First, they said it was transitory. Then they blamed it on Putin. Then they said, oh, it's coming back down by I don't know, the beginning of this year, coming back down to 4 or 3. They were even talking about inflation getting back down to 2 before the end of this year. And that was like last year. So they've gotten it all wrong. And I want to show you now something that I've been warning about, of course, not just in the last 6 weeks, but also last year before we had the crisis. I warned about a sovereign debt crisis. And we're going to look here at really who's to blame, because we have now a guy who is prime minister, right? Rishi Sunak. But don't forget that he was the chancellor of the exchequer as well, or the minister of finance, or U.S. Treasury Secretary equivalent, as you can see here, from the 13th of February 2020 to July 5th, 2022. He was the Chancellor of the Exchequer. He was in charge of the finances. And notice how the 2-year yield got even to a negative level with him running the finances, right? And then he left as Chancellor. I think that was when Boris Johnson also resigned, July 5th or thereabouts. It could have been a different date. But notice how the 2-year yield started going up. Well, towards the end of 2021 and all throughout 2022. And it's really started picking up at the beginning or end of August and throughout September. And notice how Liz Truss became prime minister on September 6th, and the 2-year yield was already above 3%. So a lot of people are blaming what's going on now on Liz Truss and Kwasi Kwarteng. But I think they were just handed a poisoned chalice, so to speak. And whatever budget they might have come out with last September, October, the markets would have done what they did. So what I'm trying to say here is that Sunak, as Chancellor, he planted all the seeds, along with his Prime Minister, of course, who was Boris Johnson, who's not a Prime Minister anymore, not an MP anymore. As you can see here, the UK was spending huge amounts. The deficit was the biggest probably since World War II. It went even through the levels from the 2008 crisis, 15% budget deficit to GDP, and that's continuing. Yes, it's come off a little bit. It's only like 5 or 6, but it's still very high, the budget deficit. They're still spending like drunken sailors. If drunken sailors spend that much, I don't know. But the other thing I wanted to point out too is the Bank of England. Because don't forget, in that period that Rishi Sunak was Chancellor, the Bank of England cut rates from 0.75%, which was still really low, down to almost 0 to 0.1. And they kept that rate there from March 2020 until the end of 2021, as you can see, when they finally changed rates. And the other thing that the Bank of England did during this period was that they injected 450 billion of funny money, or QE. And why do they do that? Well, according to this guy here, Richard Murphy, who is an economic justice campaigner and professor of accounting practice at Sheffield University, this is what he said. COVID cost the UK around 450 billion pounds. It so happens that since March 2020, the Bank of England has bought that same value of government bonds, all were issued to pay for COVID. In other words, neither taxpayers or financial markets have paid for COVID. The Bank of England did. But now they're passing on the cost to us, the markets and the Bank of England, of course. And that's what it's all about. So as you can see, they did the same amount of QE in about 2 years that they did from 08 or 09 to 2020. So that's the Newton's third law there, that for every action in force in nature, there's an equal and opposite reaction. And also they cut rates to 0.1%, and the government spent almost 20% of GDP. So it's payback time, and I think they're trying to alleviate the pain, of course, for homeowners, people who have their mortgages that are due, 2-year mortgages. Well, there are also 5-year mortgages, I would say, that are coming due maybe in 3 years. I think that's going to be a problem. And I think what they're trying to do here is placate people, because we have an election next year, and they're hoping, they're crossing their fingers that everything is going to go back to how it was prior to really the beginning of 2022, when interest rates were like 0 or negative. And now we're going to look at the technical formation here, which tells me that it's going to be very hard to stop the tide of foreclosures, or the flood of foreclosures, if you want to call it. And how can I tell this from looking at a chart? Well, because charts are a reflection of human psychology, and this pennant or triangle formation is a consolidation pattern. What does that mean? Well, it means that after a big move up or down, in this case, the 2-year yield has gone up, gilt yields have gone up from minus 0.17% back in 2021 all the way up to like 4.75 back in 2022 when we had the crisis. So that was a move of like almost 5%. If you add the negative rate to the from 0 to 4.75, you get 4.93. So usually these consolidation patterns, it's like a breather. The market takes a breather. They resolve themselves three out of 4 times roughly. They continue the previous trend, and we've broken the pennant or flag, as you can see here, or pennant or triangle, as you can see here. So what happens usually is that from that breakout area, you add the distance that the market covered in the first leg, which is almost 5%. So you add 5% to about 3.8%, you get almost a 9% base rate, or actually not base rate, but 2-year gilt yield by, I would say, and I've spoken about this, if you look at the time that it took for yields to rise from 2021 to 2022, it was about 18 months. So if you add 18 months to about a few weeks ago, we get to the end of 2025. So I think it's going to be rough sailing. And that's why I'm saying that Sunak and Hunt will not be able to stop the tide or the flood of foreclosures. And am I happy to see this? No. But unfortunately, people were psychologically in a bad, I would say, situation back in 2020, 2021, 2022. People had been in lockdowns. They didn't have to work. And Yeah, they had a lot of savings because they couldn't spend the money. They're still getting paid. Sunak, as chancellor, he gave out a lot of largesse to the public, and he pushed people into buying homes because he didn't want to see also the real estate market collapse. He suspended stamp duty, and that's why people got involved. And unfortunately, people trust authority. Most people trust authority, and I understand that not everyone, the majority of people don't know what I know about markets and about economics. But hopefully, people who've been watching me for the last few years, and I warned about this the whole time, of course, back then. My hope is that they protected themselves and they didn't take on too much debt. And unfortunately, it's going to be rough, and I think they're playing a losing game, the powers that be. And it's ironic that we've got the guy who really seeded this crisis, Sunak, trying to solve it. Or maybe it's more conspiratorial. Maybe he did that as chancellor in order to bring everything down, and maybe that's what he's doing, and they have to pretend that they're helping. There's that too. Whatever it might be, it won't end well, because Mother Nature, or God, if you want to, whatever you want to call it, will have its final say. And I think I said it earlier. If it was so easy to solve problems, market problems like this, problems of money and interest rates with just a flick of a pen, or the world would be a very rich place. There wouldn't be any poverty anywhere. So that's why I think, don't be fooled by this reprieve. It's not going to last, and it's not going to get better. That's my opinion. So with that, I'm going to wish you all a very good rest of the day and a very good weekend. Take care. Bye.